Thanks for coming in.
Sure.
Let's talk a little bit about where you're getting this positivity from, because, I mean, it's been a year, I think most fund managers would forget when it comes to 2011, given what a 20% fall that we've had for the market here in Hong Kong. And, I mean, and it's all blamed on Europe and the US, but equity markets haven't nearly declined as badly. In fact, the Dow's up on the year.
Yes, I think Asians still take the most of the blame because of the concepts of being Asia a gear global plate. And the reasons why we are cautiously optimistic is also because of attractive valuations. After the 20% plunge, I think the valuation is on our side. And together with strong fundamentals in Asian regions, I think that will underpin the regions, underpin the market, even if Europe continue to curse the market.
Right, well, I mean, that's one of the reasons also we're seeing a pull-out of some of the capital flows have been bad for equities in this part of the world. Does that continue?
Yes, I think the capital outflow has been substantial, and we are also seeing many people tend to hold cash. So if the situations improve when the capital return back in, I think we will see the Asian market being able to do much better, and especially if the European situations does improve, and which we think there is a chance of that happening. And I would say that the global market, along with the Asian market, will also be able to rebound and narrow the gap. So far, we've seen the major discount in the regions.
What gives you the idea that the debt crisis will indeed improve in Europe?
I think so far, the market has been disappointed. There is no quick fix like Eurobond or maybe European QE. But so far, the spending cut is actually the right medicines, for the core
but there's no plan
problems.
for growth. That's the issue, isn't it?
I think the growth would probably return eventually, but probably not in 2012. 2012, we are still seeing Europe at least will suffer mild recessions. But the core Europe, like Germany and France, seems still quite okay. And of course, economy like Italy or Greece is not going to perform very well. Still, the U.S. seems like able to strut off the problem in Europe, and in Asia seems like part of Asia's, the part of Asia which is less export reliant would be able to maintain growth as well.
Let's talk a little bit about, you mentioned Asian stocks, but that's kind of like a very broad brushstroke. I mean, which of the markets that you favour here, and what really represent the opportunities?
My first favourite market would still be Indonesian and Southeast Asians like Thailand or Philippines. And although they have outperformed in the past 2 years already, and so that they're no longer dirt cheap, like 2009, and I think they're still less export reliant, and also they have very substantial domestic consumption market which are taking off now. So I would think the Southeast Asian market is my favorite. And
okay.
Besides that,
Templeton Asset Management, of course, the big guru there is Mark Mobius. Now, this is what he had to say about Korea. Let's just look at that.
Well, I think the transition has been pretty smooth, and I think it was pretty well prepared. In some ways, it's making me feel more optimistic because in this kind of environment, we can expect some change. And I don't think it necessarily means some military change, but some economic change, some realization that maybe they've got to adopt some of the market economy ideas from China. So in some ways, a break from the past could be a good signal.
So Mark Mobius is pretty confident about the prospect for Korean stocks here. What about your view?
Well, Korean has been actually performing less bad this year. We've seen only like single-digit, drop in Korean market. When you compare to other export-reliant market like Taiwan, which has dropped more than 20%, Korean has been performing okay. And I think it's been especially attractive because given the political uncertainty in North Korea, I would say that in the next years, we think Korean is all going to be okay, but it depends on Europe situations.
Very quickly here as well, just your favorite, your top pick, if you will.
I think the sector picks would be still domestic consumptions and retail in Asians, because
in Indonesia, in Thailand, in China,
and China as well.
And that's your top, sort of, because you believe everything is reorienting towards a domestic-driven economy, essentially.
Correct. It's more promising area that we're looking at.
Norman, thank you so much for your time.
Sure.
Norman Chan from Calibre